NIO stock is trading slightly higher today, up about 5 cents per share as of early afternoon in New York. That might not sound like much, but it's important contextually because the broader market is down sharply. The Dow and the S&P 500 are both under pressure, yet NIO is holding its ground and even finding a little upside. The driver? Its latest earnings report, coupled with the strong August delivery numbers released earlier this week. This is the first real test for NIO in US trading since the long holiday weekend. Remember, US markets were closed on Monday for Labor Day, which meant Wall Street didn't have a chance to immediately react to those bullish delivery numbers of 31,305 vehicles in August, a 55% year-over-year increase. Add in the fresh earnings report, and today's modest gain looks more impressive than it seems at first glance. Let's break this down into what really matters: the earnings themselves, what's happening in deliveries, the competitive backdrop, how global sentiment is shaping the narrative, and what to look out for next. First, earnings. NIO reported a second quarter operating loss of about $567 million on revenue of $2.7 billion. That's still a substantial loss, but it's narrower than what Wall Street was expecting. Analysts had forecast a loss closer to $620 million. In other words, NIO beat expectations on the bottom line. That matters because this is a company still climbing toward profitability, and any progress in controlling costs or narrowing losses reassures investors that the path forward is intact. Deliveries for the quarter also came in strong at 72,056 vehicles, up 26% from a year ago. That's solid growth in a crowded and competitive EV market. More importantly, NIO guided for 89,000 deliveries in the third quarter, which would mark a record-setting pace for the company. That kind of forward-looking guidance signals confidence and execution. Margins also inched higher, with gross margin improving to 10%, up from 9.7% last year. It's not a huge jump, but it points to slow, steady improvement in the business model, even as competition intensifies. Where NIO did disappoint was in revenue guidance for the current quarter. Management said it expects about $3.1 billion in revenue, which is below Wall Street's estimates. That tempered some of the initial excitement from the delivery numbers. It tells us the company is still navigating challenges in turning vehicle momentum into top-line financial growth at the pace analysts want to see. Still, when you put it all together, the picture is one of progress. Losses are narrowing. Deliveries are growing. Margins are improving. And guidance on units suggests momentum is continuing into the current quarter. That explains why the stock is modestly higher today despite the headwinds in the broader market. Now, let's put this into the context of deliveries. August's 31,305 vehicles marked one of NIO's strongest monthly performances in recent memory, up 55% year-over-year. This is especially important because July was a softer month that left investors worried about execution risk. The August rebound reassures the market that demand is still there, particularly for newer models. The redesigned ES8 premium SUV is helping NIO maintain relevance in the high-end EV space, competing head-to-head with Tesla's Model Y. At the same time, the ramp-up of the Onvo L90 mass-market SUV is beginning to show up in the numbers. Analysts project the L90 could add as many as 10,000 units per month by the fourth quarter. If that projection holds, it would dramatically boost deliveries and change the company's scale. August's results could be an early signal that this transformation is underway. NIO also continues to differentiate itself with its battery swap model, which provides a unique alternative to traditional charging. The company has said many swap stations are approaching break-even levels, particularly in major cities like Shanghai. If that network moves from being a cost center to a revenue driver, it could change the economics of the business. But competition remains fierce. XPeng reported a stunning 169% year-over-year increase in deliveries for August. BYD sold nearly 200,000 battery electric vehicles in the same month, and Tesla continues to dominate the global conversation. Even Xiaomi, a relative newcomer to the EV game, is gaining traction. In this environment, NIO's strong August performance is encouraging, but it also highlights the relentless competition it faces at home in China. Global sentiment is another layer to watch. NIO shares trade not only in New York, but also in Hong Kong and Singapore. On Monday, Hong Kong-listed shares slipped about 3.6% even after the strong August delivery report. That tells us Asian investors are still cautious, digesting both the positives from deliveries and the concerns about profitability and guidance. By contrast, US investors are showing more resilience today, perhaps encouraged by the narrowing loss and record Q3 delivery forecast. This dynamic underscores why it's important to watch how NIO trades across all of its listings. Performance in Hong Kong and Singapore can provide a leading indicator of how sentiment may develop in US markets. It's all part of piecing together the global picture of investor confidence. Looking forward, the key level on the chart remains $6 as support and $7 as resistance. NIO has now defended $6 for more than a week, which is significant after months of struggling below 5. Holding that line builds confidence. The next step is to test and break above 7, which could open the door to a move towards 750 or even 8. But the real catalyst to watch is execution. Investors will be focused on whether NIO can hit that 89,000 delivery target for the third quarter, how quickly the Onvo L90 can scale, and whether Firefly, the upcoming small EV aimed at Europe, Asia, and Latin America, stays on track for its 2025 launch. Battery swap economics will also be a major focus, as profitability in that network could change the long-term story. Macro conditions can't be ignored either. Bridgewater Associates recently cut its holdings in NIO and other Chinese equities, citing concerns about the broader Chinese economy. That's a reminder that sentiment toward Chinese names is influenced by factors outside the company's control. At the same time, the US Federal Reserve's dovish tilt and the possibility of a September rate cut are supportive for growth stocks like NIO, making the macro environment a mix of headwinds and tailwinds. So what's the takeaway from today's trading? NIO is modestly higher in the face of a weak broader market. That's resilience. The earnings report wasn't a knockout blow, but it was constructive. Losses narrowed, deliveries grew, and guidance for units is strong. Revenue expectations fell short, but that's something management can work to improve as new models scale. The real story is that NIO is stabilizing, regaining momentum, and building a case for the next leg higher. The stock has a base at 6, delivery numbers are strong, and the company is guiding for record-setting volumes. If US investors continue to show patience and confidence, Tuesday's modest gain could be the start of a larger move once the broader market stabilizes. For long-term investors, the key is to focus not just on today's price action, but on whether NIO can deliver on its promises, scaling the Onvo L90, keeping Firefly on track, and making the battery swap network profitable. Those are the building blocks of a sustainable growth story. For traders, the focus is shorter term. Watch 6 as the floor, 7 as the ceiling, and look for how the stock reacts in the coming days as earnings are fully digested. If momentum builds, the path toward a retest of higher levels remains open. To wrap up, NIO's story today is one of resilience. Despite broader markets falling, the stock is holding firm and even moving higher. Deliveries are rebounding, earnings are showing progress, and the company is setting ambitious targets for the months ahead. Challenges remain, but the resilience is real. And for a stock that spent much of the year under pressure, that resilience could be the beginning of something more significant.